Alright, so let's go ahead and start with an overview of the Forex market. So what is the Forex market? The FX market, or the foreign exchange market, is the world's largest traded investment or trading market in the entire world. Every day there are trillions of dollars that get traded hands on the FX markets. So who trades all this volume? Well, mostly it's the banks. For the most part, the Forex market is traded so heavily by banks who are converting currencies back and forth. Just like when you go into the airport and you see that little kiosk where they are exchanging one currency for another, banks are trading the FX market, converting and trading and placing investments throughout the FX markets. But that's not all of who is involved in the FX market. There's also people, presumably like you and I, that are retail investors or retail traders looking to get in on the action. So why do so many traders around the world prefer Forex? Well, like I mentioned, the Forex market is extremely high volume traded every day. There's also the ability to leverage your positions a lot in Forex. What does leverage mean? Essentially, it means, to keep it simple, if you have a small amount of money, you can leverage it up with a broker and trade it as if it were more money. Essentially, your broker is going to lend you money to trade with, and you can trade like you have more money. So with a small amount of money, you can actually trade it like a lot bigger account. So that's essentially why. The FX market is just a massive auction house, essentially. So let's talk about the auctioneer involved. The auctioneer in Forex is the broker. So what is a broker? Well, just like in real life, if you were to try and sell your house, you would have, presumably, unless you sold it yourself, a broker that's going to help you sell that house. Now, if you sell that house, the broker takes a small percentage of what is made on the house sale. In the same way, the Forex market has brokers, which are kind of like a middleman to enter and exit positions on the FX market. So if you want to buy the euro, then your broker is going to offer you the platform and offer you access to take that position. Now, how are they going to make their money in this? What's in it for them? They're going to make money every time you take a trade based on two main things: spreads and commissions. First, we'll talk about spreads. Spreads are going to be the idea that, okay, if you want to buy the euro, then the FX broker that you use may add something like, let's say, 2 pips to the current price. It's trading at one price, but the broker is actually going to offer it to you at 2 pips higher than that, and they are going to make that 2 pip spread on your trade. So that's spread. The other one is commissions. Now, with every FX broker, it's a little bit different. Some offer commissions, some offer no commissions, some are cheap, some are expensive. But for the most part, Forex is pretty competitive in their brokerages for commissions and spreads, which is very nice as a retail trader. So commissions are going to be your cost per trade. So let's say that if you want to take a position on the euro, you're going to get charged some percentage of your position size, something like that. In the stock market, it's often around like $5 per trade in the American stock market. But in the currencies market, it's often a lot cheaper, which is very nice. So what is the difference between a regulated and unregulated broker? So one thing that's important to note is that in each country, there are going to be companies that are used to approve or disapprove brokers. So in the States, of course, there is the FDIC, which is going to essentially make a judgment call about certain financial companies and essentially pass or fail them. Now, if a company or a broker is regulated, it's for the most part a positive sign that they are probably, for the most part, pretty trustworthy. Now, if they are unregulated, it does not necessarily mean that they are a bad broker, but it is cause for concern for more research to be done. You need to be very careful if you're going to use an unregulated broker. My personal recommendation is definitely to use a regulated broker in your country that is going to be a lot safer for you. So for me, I use OANDA in the United States, where I'm from, and that is definitely a great broker, and they are regulated, and I know that I'm very safe with my broker.